Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. I'm just going to get right into it because, I came in with I think 6-7 longs and a hedge. And I just want to get you guys into the mind of an active trader and how you try and do some position management using strategies, because we are in a fast market, and we're also in a market that's been up for 8-9 years, so nobody wants to be caught holding the bag. But also anyone who's been shorting this market, is definitely not doing well or might have blown themselves up. We've seen some rotation. We've seen some, bearish slash, rolling corrections. But ultimately, we've had very healthy action with lots of setups to participate with if you're an active trader. And if you're a long-term investor, I don't care. If you invested $1 before the 1987 crash or your first dollar before the 2000, tech bubble burst, et cetera, and did it every single month over the course of the last 20, 30, whatever, how old you are, you did just fine. Okay, preaching the end of the world is not a way to, save for your retirement or put your kid through college. But anyway, trading actively for cash flow is different. You have to put together daily P&Ls, weekly P&Ls, monthly P&Ls. So you have to have a system and a process on how to navigate a tier system, and keep yourself safe where it's calculated with some price discovery. So anyway, came in today with multiple longs. I just want to talk through some of the positions because you might have had them also on how you could have navigated and why I'm in a certain stance right now. You go to the chart of the S&P cash. I did come in today with a spider hedge. Okay, why did I come in with a spider hedge yesterday? Because after a move that we saw from testing the 8-day here at 24.03 to then getting long here when we took out 24.18, I figured on a narrow range bar after a nice 3-day move, if I'm long 7-8 positions, why not have a little bit of a spider hedge on? So you go to the spiders. Okay, spiders basically closed near the lows of the day, but actually had a bit of a bounce first. Okay, so the pivot that I was targeting for today to use as a gauge was not yesterday's low, because that was such a narrow range. You could have used it a little bit later in the day. It was more this low, okay, which is right here. This low was 243.08. So on the open, okay, what I do is I try and cover my hedge and add two longs that I think are strong. So into this gap down, okay, I tweeted to Redler All Access that, first of all, pre-morning call express, I covered some of my spiders. So I'm like, we're down 70 cents. Let me cover some and then figure it out. And then as soon as we took out this little inside range here, I'm like, you know what? I'm done with my hedge because, we held the prior low. Okay, the prior low is 243 something or other, which this was 243.12. And now I'm going to just go back into my position and management mode. Okay, so let's go first. Let's go back to high beta tech. Okay, we talked about the road to 1,000 plus. So I've been in Amazon, here and there, pretty much from the start of the year throughout the entire year with Redler All Access. My Redler report was like we can get to 1,000. It was at 775. That was then. Anyway, last time I got long for a swing trade was on Thursday around 995, trying to play another trade through 1,000. So for that, okay, basically, I was thinking that we could get above this little bull flag after testing the 8-day here. So was long on this inside day, added on the break above 1,000, and then was long into yesterday. And why did I get out today? Because what you had here is a push through above a prior high, which was 1,013. I think I actually sold 1,015, so I had a better sell, and a close on the lows. Okay, doesn't mean it's game over for Amazon, but it doesn't mean it could test the 8-day or even maybe get a little bit below. Yes. So a day where the sellers win in a stock that's had an unbelievable move, I'm going to reduce. And a day where a stock closes in the dead lows, it's not a day actively that I want to be long. I want to wait to see what happens the following day. So for now, all you know is 1,001.25. So if it opened up $2, some guys might short it through today's low tomorrow, or if it opened up near the 8-day, which has been holding pretty much the majority of this trend, I'll look to buy some back. But all in all, you had some time. Okay, first in the beginning of the day when it was down a little bit, you know what? It wound up going green, and you actually had a bit of a trade through a prior high. So you go to your 5-minute chart to see how you could have maneuvered it. Okay, you did have a decent type of opening trade where here it is. Okay, where it opened a little bit lower. Okay, at first I was like, let's see if we could hold yesterday's high, which was 108. I actually had bids in pre-market there. Then it went above, pushed above, and boom. boom, a small little topping tail on the 5-minute chart could have got you out, or at least given you a little bit of clues to wait and see whether this upper wedge holds or it breaks to the downside. So that was the way you could have navigated the open. Okay, if you were long overnight, it was down a little bit. It opened, went green, gave you a push up to almost, this 1,016 or so, and then you could have used yesterday's high of 1,013 as your red dog reversal line in the sand to say, hey, went above a momentum level, wasn't strong enough to hold it. It's a momentum name, so let me pull back a little bit. So anyway, that's the thoughts there on Amazon. Doesn't mean it's game over, just means now, wait and see what happens tomorrow. If it opens up $4 tomorrow and I'm not in it, I don't care. That is my process. Okay, I get out when you see a candle like this. Same way yesterday I got out when Facebook, made a little bit of a topping tail. All right, there are entries and exits and ways to navigate, okay, which I like to point out. Okay, if you remember when I did the volume 1 on Facebook, that was right here. That was a nice tight pattern. This is a great setup. Why is it a great setup? You have a descending trend line. You just had a reversal type of pattern where you have a down open matched by an up open, commitment to it holding the top 20%. So this is when I said get long for a swing trade. I think we got long into here, got back involved on this little tail into the 8-day, added on this day and this topping tail into highs, had me sell it. Why? Do I think Facebook is over? Do I think no one's going to use their platform anymore? The tweenies are leaving? No. But you had a little topping tail where it got above this, came back below. So I was like, hey, from here to here, I'll get out and I'll revisit. Why? It's above the 8-day, which it sees sometimes. Sometimes it sees a 21-day. So let me just figure it out actively. So today was up, made a lower high, closed red. So still to me in wait and see mode. Google also did the same thing as Amazon. They kind of trade together where got back up towards yesterday's high and came back in. The time to be long the dip is into the 8-day like here. Time to add for a momentum trade is when it gets above a momentum level. And then, on a day where it closes on the lows actively, says have a little less on if you don't want to be all out, or be out of it if you do that kind of thing. Last time you had a wide range bar down, which engulfed the range. The next day, basically opened flat. You had some time before it went again. We'll see what happens tomorrow. One of these days that might not happen. I was also long Apple. Okay, Apple to me was a really actually good trade. I kind of, not to say got lucky, but I was showing Jeremy, my intern, why I added to it intraday. First of all, I was long at versus yesterday's low, which never got below. You had 2 pivots to get involved. One was when it went above the downgrade high, and then the morning high of, what was it? I think it was 154.81. So that was a nice extra day trade. Okay, obviously turned into something later, which wasn't as good, but why did it do it? So here, okay, went quickly, came back, didn't break the low. You could have stayed involved, and then it got very tight. Tight versus this spot here, which was 154. That's 150. I thought it was 154.81. Let's see, where's this candle? Yes, that's it, 154.42. This is 154.72. Why did I think it was 154.81? Anyway, somewhere around here. So basically, I actually was in the gym still. I was long some from when I left, and I was watching it curl in front of 154.70, saying if it gets above the morning range, it should run. Bought some, got back. It was all the way up here, sold some strength, and then all of a sudden reduced a little bit here as I saw Amazon down 3 or 4, Google down 3 or 4. I'm like, let me get out of the way, and I didn't take any home long. Kind of bear flag here, but when you see a breakout move lower, if it was any good, it should have held up here. So tomorrow we'll wait and see. But that was the way to navigate. If you came in long, went sideways, here's your ad. Then all of a sudden, boom, this 5-minute bar kind of engulfed this spot here, and then came back in. So why not wait and see? I also came in long BABA. I've been in long for BABA for a few days. It kind of did what Facebook did yesterday. Pushed above a prior high, came back below it. So what I do is when it goes red, okay, I sell some because you never know how far red it's going to go. But if it's up above a prior high, comes back below that prior high, that's a sell signal because momentum didn't stay. Then if it goes red, that's another sell signal. And then you wait for price discovery and try and get back in lower versus a level. But you know what? It didn't stop really going down. So for the first time, I'm kind of flat BABA. Okay, you go to the daily chart. Why is Red Dog flat BABA? Does it mean it's game over BABA? No, it just means that, what did it do? It pushed above a prior high. Okay, here is your high here. This is 125.56 and came below it. So if you were playing for it to get above the prior 52-week high or the all-time high, you know what? Wasn't ready today. So it got above this, went as high as 126.20, went back below it, a little bit of a sell signal, went red. You could have sold a little bit more, saved yourself some money, and now wait and see if the 8-day holds, or does it come down and test the 21-day, or not. Okay, we've seen this before, but for me, again, as a momentum trader, I was in it on this day, and I was in it these 3 days. I was in it today. So for 4 days, I'm in BABA. Added to it in the morning when it got above this, sold a little strength, and then later in the day when I saw a tech start to fail, I'm like, hey, let me get out of the way and figure out what's tomorrow. If it opens up 50 cents tomorrow, big deal. If it opens up down 50 cents, you know what? We could use today's low of 124.27 as a way to get back involved once we get some price discovery in the morning. Okay, at this point, the bears are probably saying, hey, look at the double top, but we shall see. Anyway, one thing I did buy today, and everyone's like, oh, Red Dog, you bought the gold miners. You know what? Gold's had a big run. The miners were tight. It was up like 30 cents in the morning. I'm like, let me buy it versus a level. And I actually added to it once, and I'm in tier 1. The GDX, you look at this, nice wide range bar, breakout above a 5 or 6 day consolidation. Do I like the gold miners? No. But I figured it was worth a try considering I've been riding tech, so maybe try and ride something else. Close near the highs of the day. How did I get in with the plan? Well, it opened up after about 15 minutes, okay, here. So I bought a little bit into this bar. I added here, and I said, okay, I'm going to put my stop in at the low of the day and let it ride, for the session. So at least it was calculated. I think, somewhere around this 23.20s I was buying it in the first 15 minutes, saying I'll put my stop in. If the gap holds, that means there's power. Held all day, trimmed some towards the end of the day. I'm in tier 1, and we'll see what happens tomorrow. I don't love the miners. I hate, trading them, especially this year. But I'm in it for play overnight. The GLD had a really nice run, into prior highs here where the GDX was lagging. So otherwise I would be in more if it was leading gold, but it's not. It's lagging. So I'm in some. For those of you who are short gold or got long, took back the 8-day here, gapped up and held the 21-day there. And now all of a sudden, it is a little extended from the 8-day to 21-day to 200-day, but it's had a nice move, I guess, following Bitcoin. That's been the real mover, but anyway. What else? The financials held again, what are you going to the bears are definitely a little upset if they've been buying, or shorting, into big time support, or not buying, but pressing. We've been failing here, okay, but hasn't broken this key area yet, so it's really macro-wise hasn't triggered a down move, but at this point hasn't really broken the right shoulder to give you the longs anything to be so excited about. I've been avoiding the banks with little trades here and there. Bank of America also, what did it do? It, didn't really bounce as hard as as the XLF, and it's on big time support. I would say avoid it. I don't see there's any really compelling reason to be in it except for buying support has worked here or worked there, but one of these times it might not work and break, so I would say stay out of the way there. The IWM, I posted a chart this morning. We talked about whether or not there could be some commitment to the 3-day move, and you know what? It actually held the level and held in better than some tech. So I guess for now, you had intermediate support hold, made a little peak versus the prior high, came in, held. If you look at my chart from the morning, we talked about 137.80 to 138.20. Well, went to 137.81 and came off of it. How do you trade something like that? I say sometimes buy it versus a 15 or 30-minute low. Why is that? It gives you a point of reference. Well, here was your 15-minute low. If you missed that, what did it do? It came in, made a higher low. So this could have been your buy versus that spot, and then wound up giving you a decent move. Here's when it broke the morning range to the upside, but then trickled lower at the end of the day. So ultimately, do I think that the market, the IWMs, could go up without tech? I'm not sure. Today was one of those days where I figure out if you're not really committed to something, loosen up. Like AMD, I was in from yesterday. I sold it, and at the end of the day, didn't really need to sell it, but I sold it anyway. Why did I sell it? Because I figured it can get to the 50-day, and it got to the 50-day. Bought it yesterday, had a nice move today. So into this area, if I'm a little cautious on tech, why am I going to be? Well, AMD's in a, it's an out of sequence type of trade. It's not like a leader, but anyway, gave you a nice day and a half move. And how I try and make a living in this market is by finding a day one that gives you a strong day two. If I had to be in this long or short, I would still be in some long. It still looks fine. BlackBerry also, I just felt like I was cleaning things up. No real reason to be out of it. Still holding higher, still holding the 8-day. It's had a big move. I'm not really that committed to it. That's why I just sold it towards the end of the day, figuring I'll reevaluate. If we had a big gap down, this probably would be not as affected as some other names. Not saying we're going to have a big gap down tomorrow, but again, some of these things pushed through and failed. Some of these things lost some momentum. You did hear it hit an air pocket. Sometimes these air pockets are meant to get people out of their longs, get some people short, so then we just resume the trend and it's fuel for the next move. But sometimes, or one time it won't be. So that's why I don't mind reducing, getting out of the way, let price discovery happen, and then get involved in more calculated. Where I've done this many times in the past, where a day like today has led to nothing, but in the next day or so after, I rebuild into 4, 6, 7 positions with a bit more risk defined. So for now, very light. Tomorrow, if we're up 7 handles in the morning, you'll see me tweet say, you know what, yesterday, I sold some strength, salvaged some longs. I'm coming in today flat-footed. I got to figure out how to either re-enter or fade levels, et cetera, based on what's going on. So that is the way I use position management with some tools and tactics that I've learned over the course of the years that I've tried to teach to all of you. You hear me rant sometimes on Twitter against guys that are permanent bears just because they've been, preaching crashes since 2012 and scaring the people that don't know that much and how not to get involved in the market. And they talk about all the risks of the stock market, but no one really talks about the risks of not having a long-term index type of plan if you're in your 20s or your 30s, or trying to save up like me for my kid's college who's 8. You know what? If we have a corrective phase for 2 years, that'll give me a good average cost for the 529 plan that could potentially, come back to life in 3, 4 years where, I have until he's 17. So it all depends on where you are in your financial being, and all depends on your time frame. You need to know how to differentiate each of them, and then hopefully do a little bit of each, and that's how you make, real strides in the stock market. Hopefully this helped, and I'll see you tomorrow morning at the Express if you're not a Redler All Access subscriber, and if you are, I'll see you at the full version. Have a good night.